Venezuela versus USA issue explained. Causes, conflict, and impact on the U.S. stock market. The relationship between Venezuela and the United States has been tense for more than 2 decades. What started as political disagreements gradually turned into economic sanctions, diplomatic isolation, and energy conflicts. Because Venezuela holds some of the largest oil reserves in the world, this conflict often raises an important question for investors. Does the Venezuela-USA issue hurt the U.S. stock market? To understand the impact, we must first understand why the conflict exists, what is at stake, and how global markets react. 1. Background. Why Venezuela and the USA are in conflict political roots. The conflict began in the early 2000s under Venezuelan President Hugo Chavez, who adopted a socialist and anti-U.S. stance. He criticized U.S. capitalism, strengthened ties with countries like Russia, China, and Iran, and nationalized major industries, including oil. After Chavez's death, Nicolas Maduro continued the same policies. The U.S. accused his government of undermining democracy, election manipulation, human rights abuses, corruption. In response, the United States refused to recognize Maduro as the legitimate president and instead supported opposition leaders. 2. U.S. sanctions on Venezuela. Economic sanctions. The U.S. imposed heavy sanctions, especially on Venezuela's oil sector, which is the backbone of its economy. These sanctions restricted Venezuelan oil exports, froze assets, limited access to global financial systems, banned U.S. companies from doing business with Venezuela's state oil company, PDVSA. Purpose of sanctions. The U.S. goal was to pressure the Maduro government to step down or accept democratic reforms. However, sanctions also severely damaged Venezuela's economy, leading to hyperinflation, food and medicine shortages, mass migration, millions leaving the country. 3. Why Venezuela matters globally. Oil reserves. Venezuela has the largest proven oil reserves in the world, even larger than Saudi Arabia. However, due to sanctions, poor management, aging infrastructure, Venezuela produces far less oil than its potential. Energy market importance. Because oil is a global commodity, any supply disruption, even from a weakened producer like Venezuela, can affect oil prices, energy companies, inflation, stock markets worldwide. 4. Does the Venezuela-USA conflict hurt the U.S. stock market? Short answer, not directly, but indirectly, yes. Sometimes. Let's break it down. 5. Direct impact on the U.S. stock market. Minimal direct impact. Venezuela alone is not large enough economically to crash or seriously damage the U.S. stock market. The U.S. economy is massive, diversified, and driven more by technology consumer spending services. Domestic businesses. Therefore, the S&P 500 does not crash because of Venezuela. NASDAQ is barely affected. Dow Jones's impact is limited, so there is no immediate or direct crash risk from Venezuela-USA tensions alone. 6. Indirect impact through oil prices. This is where things matter. Oil price channel sanctions on Venezuela reduce global oil supply. When supply decreases and demand stays strong, oil prices rise, energy costs increase, inflation, pressure grows. Higher oil prices can increase fuel and transportation costs, raise manufacturing expenses, reduce consumer spending power. This can negatively affect the stock market, especially sectors like airlines, transportation, manufacturing, consumer goods. At the same time, energy stocks benefit. 7. Who wins? When Venezuela is sanctioned, U.S. energy companies benefit. When Venezuelan oil is restricted, U.S. oil companies gain market share. Companies like Chevron, ExxonMobil, and ConocoPhillips benefit. U.S. shale oil production becomes more competitive. In fact, the U.S. has sometimes partially relaxed sanctions when oil prices rose too high, allowing limited Venezuelan oil exports to stabilize markets. 8. Inflation and Federal Reserve effects. Higher oil prices contribute to inflation, which is a major concern for the U.S. economy. When inflation rises, the Federal Reserve may raise interest rates. Borrowing becomes more expensive. Stock valuations, especially tech stocks, come under pressure. So the Venezuela issue can indirectly affect stocks through oil, inflation, interest rates, stock market 9. Impact on different U.S. market sectors, energy sector benefits, higher oil prices, higher profits, strong dividends. Technology sector, slightly negative. Sensitive to interest rate hikes, higher inflation hurts, growth stocks. Consumer sector, negative. Higher gas prices reduce consumer spending. Defense and geopolitics, sensitive stocks, often benefit during geopolitical tensions. 10. Venezuela versus USA compared to other global conflicts. Compared to conflicts like Russia-Ukraine war, Middle East tensions, US-China trade war, the Venezuela issue is much smaller in scale. It does not dominate headlines or investor sentiment unless oil prices spike sharply, sanctions policy suddenly changes, Venezuela aligns militarily with major U.S. rivals. 11. Could it become a bigger problem? Possible scenarios. The conflict could matter more if oil supply becomes extremely tight globally. Venezuela forms stronger military alliances against U.S. interests. The U.S. increases sanctions during a global energy crisis. However, a military conflict is very unlikely. The issue remains mostly diplomatic, economic, energy-related. 12. Investor perspective. Should you worry? For long-term investors, Venezuela is not a reason to panic. U.S. markets are resilient. Diversification protects against geopolitical risk. For short-term traders, oil price movements matter. Energy stocks may react to policy changes. Inflation news linked to oil can move markets summary. The Venezuela-USA issue is mainly about politics, oil, and sanctions. It does not directly crash the U.S. stock market. It can indirectly affect stocks through oil prices and inflation. U.S. energy companies often benefit. The broader U.S. economy remains largely insulated. Like and share with your friends who are stock investors, and subscribe to get more videos. What is your opinion? Tell us via a comment.